Friday, November 21, market analysis, Stan Ehrlich. Remember, I'll be gone next week. No YouTube recordings. Good luck with your trading. I start out with stock market indexes and go to futures and some stocks and commentary intermingled. As you know, I've been looking for a break. Obviously, we have some, but for the last couple of days, the lows in October, a little bit lower, a little bit higher, held on the lows and or the closes of yesterday, and today we got a bit of a bounce. Some indexes, the MES, made it a little lower than yesterday's low and closed a little stronger. Now, I did draw in a line here, which I think might be a neckline, but we already started to violate it today. So I don't like that a darn bit. Closed, that's where the little blue marker is, custom made candles, so to speak, above the neckline. That's not supposed to happen. The golden rule is that yesterday's huge bearish reversal, engulfing bearish signal, has not been violated, and that would be to get above the high of yesterday. And I stick to that. If that happens, then something is totally wrong with what I was expecting, and I would go back to the drawing board to figure things out. In the meanwhile, next week when I'm not here, we'll see what happens. But this rally doesn't bother me, except with the close above the neckline for some, not all, of the indexes, the SPs, SPY, MES. And here's the 1 minute chart. I wished it would have come down a lot more on the close. Can't make the market do what you want it to do. You always have to move with it. On the SPY, pretty much the exact same story. Broke the October lows, but didn't close below them. Rallied, closed a little bit higher on the day. Now, in the last few days, a little bit is a lot more than what you would say a little bit was a few days from earlier, because the volatility has just jumped like crazy. So 7 points up used to be a pretty darn good, strong day. Today, medium. Next, here's your closing slippage, but the overall day was after a new low, fairly firm. QQQ, a little bit different story. Now with the Qs, we broke yesterday and closed below yesterday, the October lows. Today, we managed to rally back up above the hypothetical neckline, but did not close above it, closed below it, unlike the spider and the MES. This formation is acting 90% correct. Why would I change my mind? Looking for a low lower than today's lows and a close below today's lows very quickly next week. And that would mean, if I'm right, all the indexes would basically follow to one extent or another. 5 minute chart, 1 minute chart, sorry, on the MNQ, which did slip a pretty good chunk below important levels by the time the bell rang at 1 o'clock California time. Now, MNQ still below the neckline, although it rallied above it a bit. That's a no-no, but close is most important. I still like what I see, still looking for a lot lower levels. And MNQ has also broken, of course, the October lows, like the QQQ, and even closed below it yesterday. So this is a little bounce and a down move, in my opinion. And the 1 minute chart on MNQ needs to break today's lows ASAP and stay there. Yesterday, we did have a bearish engulfing ER sell signal. That's why the body of the candlestick is red. On other indexes, by the way, I didn't even mention it. We had a sell signal on the exact high day. I'll go back. That's the top of the market for the MNQ. We got the top day. We didn't quite get the top day in the QQQ. We almost just missed it. I've said many times since it happened. On October 29th, it managed in the last 60 seconds to close slightly higher on the day, killing my bearish engulfing red signal. I'm mad about that, but we did get the exact high day on the MES, and the next day you have another bearish engulfing ER signal. We have two of them. I don't remember seeing that before on MES. The implication, of course, is it's going to work really well, but that is not a necessarily true implication. Let's go back to current. And we're back to YM. And the Russell index has bounced off the lows of the support level a little lower than yesterday's low, right smack at the bottom of my zone, and has fulfilled the minimum downside objective off of a very small 2 week or so double top. That worked past tense pretty much yesterday, frankly. But the fact that it closed very strong today, relatively speaking, a new high close for the 3 previous days, says something about the support area hanging in there pretty good. Now, I wouldn't be surprised to pop up maybe in the middle of the yellow. Next, RTY, 1 minute chart. Actually looks a little like a head and shoulders trying to form there. Ran out of time. Bonds bounced up to the resistance level again. Yesterday was at support, passed the test, and all of a sudden it's back up to resistance and then pulled back down some. Notes, and that doesn't mean anything. All I got is a sideways trading range waiting for a breakout. Notes, did get above resistance and did get a close above the last 3 weeks of highs. That looks a little more friendly. We're not that far away from overbought. I could expect notes to go up a little bit more maybe, but I'm very skeptical as whether it's going to get above 113.28-ish. Next, crude. If it can rally again, and I think it's going to drop off another chunk here in the next day or 3 or 4, then I think the resistance will stop it again. And I'll pull that to the right a bit more. There we go. Now, support, I expect a little bit of a bounce. Remember, we're not too far away from oversold already. And if it drops down that much to the line, 55.80-ish, it could very well be oversold. Next, natural gas couldn't make a new high. So what? The trend is still up lately, the last 3 months. Support passed the test very nicely on Tuesday of this week, and we almost made new highs. I'm going to look for new highs next week, and I don't think it's going to get below 2.435 in the meantime, and not again for a long time. Next, very sharp break again on heating oil. Well, that's what we call a false breakout to the upside on Tuesday of this week. Plus, it was overbought. And we do have some divergence, I notice now in past tense. New high in price, but not a new high in the indicator. So a variety of reasons to believe it would have come down some, but this is pretty darn good in 2.5, 3 days. I'm looking for lower levels, maybe the top of the previous downward sloping flat bottom triangle. By the way, those usually break out to the downside. It didn't. Oh, it tried to, but it bounced off support and then got oversold. So here we are, maybe back somewhere. I can't come up with a very good one on heating oil at the moment, but a little bit lower. Crude, gold, still expect to see a test of support levels at 39.06 and maybe a bit lower than that. Silver dropped off pretty sharply, but doesn't stay there. Double top possible. Maybe we're going to have a breakout below 45.64. If that happens, we're going to supposedly come down to 37.04. And that is significant support also. Although there is some good support a little bit higher than that, but that's not my objective. If we break out to the downside, that means you have to close below 45.55. Next, platinum. Broke a little bull trend line yesterday, followed through testing another different trend line today that's a little more profound. I think I said that yesterday, and bounced right off of it. But no big deal. I'm still looking for sideways to lower. Next week, probably new lows, new low closes. and probably coming back down below 1400. Next, copper bounced off a little trend line, not doing much. Maybe it's going to go sideways for a little while longer. This is kind of between a rock and a hard spot, so to speak, at the moment. And we've got soybeans and the grains. As you know, I am long-term bullish on the grain complex and have been trying to justify it for many months. Finally, we've had in the last couple of months long-term major upside breakouts, technical corrections, bullish formations, support level past the test, making new highs, etc. So here we are in beans, made new high for the whole trend up and for well over a year, and has come down for 2 or 3 days to a little bit of support. Now, I'm not ruling out 1093-ish, but soon, somewhere in here, and it could have been today, I think it could hold and will make new highs soon, within a week or two. Soybean oil dripped off a little bit more, and it's got a lot of support below the market. Plus, we did get the bottom of the market on a green bullish engulfing AR bicycle. Yay! Uh, in this particular case, and we've had a pretty good move up. So I see this as simply a short-term minor correction and an upward trend. Other bear trend lines have been broken. Bearish formation downward slanting channel has been broken. By the way, those bearish downward slanting formations in a general sense tend to end up being bullish because they break out to the upside usually. Next, soybean meal. Again, new highs for quite a long time. Technical downside correction short term, maybe a little bit lower. 312.80 looks interesting. Also 308.80, a little more interesting. But I'm still looking for the next week or two, new highs, new high closes. Corn, same comments. Now, I am a little concerned. Today's the second day. We closed below the neckline, the big fat yellow line. That is almost like too much. One day I can see being a little trap, closing, bouncing back up above the line today, but it didn't do it. It's staying below it. So the head and shoulder bottom, which I didn't like much in the first place. Remember, it had a double shoulder on the right and a single on the left, no symmetry. The timing for the last shoulder is off by about a month too late. Otherwise, most of the other body parts have been there, but the neckline is now broken. And when you get a broken neck, it doesn't hurt. I mean, it does. It does. It tends to be fatal. So we'll see what happens. I'm still bullish, but I need to see a turnaround, but for different technical reasons. Wheat bounced off the support level real accurately. It might go a little lower. There is a gap to close down here at 529 and 3/4, but anywhere along here, I could expect it to turn back up again. Next, we've got Apple. Bounced up, going sideways, did not yet close an old gap. I'll pull that marker over a little bit more. And the bearish engulfing we had on Tuesday did not work. Killed it on Wednesday, Thursday, even more, but almost made new lows. But today, bounced back up. I'm still looking for other gaps to close at lower levels, down to say 253 wouldn't bother me at all, and I really think it's likely to come down to 241. Next, Tesla. New low close. Already broke out to the downside. My minimum downside objective is 553.80. It almost made a new low also, but not quite. Coming down. Hey, another new low close on NVIDIA. With the stock market, as I've mentioned before, I expected these symbols, which did give a variety of different toppy out technical indicators. This was an upside exhaustion gap, overbought conditions, closed the gap, turned around, couldn't make a new high. All of a sudden, gap down for a downside breakaway gap instead of exhaustion gap with a minor double top over 4 days. Kaboom. All in overbought conditions. Kaboom. So now my first objective has been met. Next, 164.25. Probably not the low. Probably more like 153. Next, We have started to close the gap in AMD that I've been talking about since it occurred back on October 6th. Partly closed. Takes a while sometimes. Often it's only a few days to a couple of weeks. So I'm still looking, as I said, every day, I believe, for 171 and a half-ish. Give or take a little. Period. Next, MES, daily data chart, coming down, in my opinion. You guys have a great Thanksgiving week. Next week I'll be gone, and profitable trading to you.